Hi, everybody. Welcome to Street Smart Live. I'm Cindy Edwards. Today, we are talking to the Metallic Group, a collaboration of leading precious and base metals exploration companies. But before we begin, please take a moment to take a look at our disclosure statement. And while we're looking at that, why not hit the subscribe button below? And then you'll be up to date on all the Street Smart Lives that are coming up in the future. There you go. We've taken care of that bit of housework. And as we take stock of our holdings, what does the future of mineral exploration look like? Are precious and base metals a smart investment to hold on to or to add to your portfolio? Let's get the goods today. We are joined by mining sector expert John Feneck, president of Feneck Consulting. We have independent analyst and portfolio manager John Newell, and the Metallic Group of companies, including Greg Johnson, CEO of Metallic Minerals Corp, Michael Rowley, President and CEO at Group 10 Metals, and Tim Johnson, President and CEO of Granite Creek Copper. So it's going to be an interesting show today, no doubt. John Newell, we are going to start with you. A lot of young or new investors that I've spoken to are not even thinking about metals. Can you give us an overview of the metals market and walk us through some charts that will tell the story about why now is a good time to be looking at metals and the mining sector?
Okay, well, thank you very much for allowing me to speak today. The following series of charts are what we're trying to do is make a fundamental case for higher metal prices in basically all categories with the charts that follow. And the technical analysis is just an expression of the hearts and minds of all the investors in the world as represented in a chart. And the chart is past and current prices. And so if you go to the first slide, I'm going to start off by making the case that inflation is coming back. And you can see on this chart that we've broken the downtrend line, and we've done it quite convincingly. But I want to point investors' attention to the fractal pattern or the triangle. It goes back to 2004. It broke out, pulled back to test that downtrend line, and then really went up. And that's exactly the time when precious metal shares in 2004 to 2008, and then subsequently to 2012, had a huge run. And I think that that's what it could be in store for both senior and junior precious metal shares. And if you go to the next slide, there's a lot of talk about a strong US dollar, but one can see that from that dotted red line that the trend has been down really since the mid 80s. And you can actually lower that trend line a little bit. But I wanted to point out the fractal pattern in 2001, 2002, where the US dollar broke down, and it appears to have the same look. This chart was actually done almost a year ago, and it looked like the US dollar was weakening. And in the next chart, you can see that really since 2015, 2014, that big run up, we've kind of basically gone sideways for the whole period with brief Roman candle kind of sporadic run ups and then failure. So I think that the market looks weaker, and I'd go so far as to say that 80 to 75 on the USD is a real possibility here. And this next chart is an old standard. I'm just trying to point out that this is the gold Dow gold ratio, or the Dow divided by gold. And if you go back to the big run in gold in the early 80s, late 70s, early 80s, you had a run to $800. This fractal pattern looks very similar, and same and in the same percentage gains off the low. We've seen a correction, and it really points, if it was exactly the same, you would see a Dow ratio of a Dow gold ratio of around 2 to 4. And if you look at the lower part of the chart, you can see that the US dollar has been going down for 40 years, essentially, and gold has been rising for that period of time. But just from the press, you kind of think the exact opposite. On the next chart, I'm just showing the bullish percentage index. And in August, we were at 100. So 100% of the bullish of investors, as represented by this chart, are bullish and not a lot of room to go higher. So one would have to be careful in early August about some type of correction. And you can see that gold's corrected 14% in the upper part of that chart, and the Huey index has corrected about 25%, while investor sentiment has declined about 65%. So I think we're close to a period, aside from the COVID smackdown, where the bullish percentage index lost 91%. We're pretty close to a bottom. And in the next chart, I'm trying to, I have shorter term charts, but you can see that all the targets that I've had on my short term charts have been met, except the long-standing target of 2465 before 2022. And by 2022 or before, with, of course, extensions off of those targets if they're met and exceeded. But for now, we're sticking with 2465. The next chart is a chart that was done, and we postulated that in the same way that gold went down in 2012, 2016, or 2013, that after building this long base where it kind of averaged around $1,200 a mean, that when it broke that 1370, that it would very quickly move to hit those first two targets and subsequently the 2465. And on the next chart, you'll see that that's exactly what happened. And this is going to come up when we look at the gold stock indexes. But you saw this very rapid closing of the big drop in 2012-13. So the next chart is a representative of the JDXJ or the junior gold miners. And you can see, just in the same way that gold broke out of that pattern, had a slighter pullback in the lower part, and referring back to the last chart, you can see that this long consolidation, a breakout, a pullback, and then we feel that we could see, like gold in the previous chart, a very rapid rise in the price of gold stocks that reflect all the fundamentals that John will talk about later. On the next chart, we're meeting resistance in this ratio of the XAU, or the senior miners, relative to gold. And you can see that it's tried in 2014, 2016, and now in 2021, trying to pound through that resistance. You can see a nice uptrend from the COVID low and the 2016 generational low, and you're pounding against that resistance. And so there's a lot of frustration in the market. Why aren't gold stocks going higher? Why aren't the juniors participating? And some are and some aren't. But as a group, it's a frustrating kind of a market. But just like that previous two charts, when you go through that resistance, it's like a jet fighter going through the sound barrier. You get the bang and then the hush of no resistance. And that's really where we're trying to gather the strength for these stocks to start fundamentally representing themselves in the marketplace. And the next chart is so the JDXJ, or the senior gold markets relative to gold itself, and you can see the big lag that's happening right now. They are way behind the gold price, and in fact, if you go back in the 80s and 90s, you saw gold stocks historically, because of the leverage, trade at a premium to gold prices, and now you're lagging them badly for those previous technical points that I made. And on the next slide, the final slide, is the JDXJ to gold, and you can see that just like the XAU, you're pounding against that resistance, and these stocks, the junior stocks and the mid caps, should really rapidly increase once we get through that that resistance. So that's sort of my technical argument for the fundamentals.
I'm really glad you're here, because you can decipher what's going on with those charts. To me, those just look very confusing, but thank you. As far as I'm concerned, things look good. That's what I got out of all that things are trending in the right direction. John Feneck, you've been bullish about gold. Do you agree with John Newell about the fundamentals for the mining sector, and in particular about silver, nickel, platinum group metals, and copper?
Sure. Thanks, Cindy. And I should start by saying that disclaimer came on pretty quickly. So I'm not being paid for my appearance today. Sometimes I am, and I'm here because I really believe in these three companies. And it's a pleasure to share the stage with John. I've followed his work for a number of years. So, I have been bullish since October of 15 in gold. And I started managing money in January of 16 because I saw a tremendous opportunity in the mining stocks. And much like John, I see that same opportunity today. It hasn't been this good since Jan of 16, in my opinion, in terms of valuation for names that are held in ETFs like GDX or GDXJ. So, I bought a lot of great values along the way. Some of my larger holdings, Golden Minerals, ticker AUMN, US Gold, symbol USAU. But recently I've become more bullish on the stocks that wouldn't even be in something like GDXJ. They're too small because as I've told Mike Rowley and a bunch of other people in this industry, you go through a progression when you have a breakout like we've seen over the last, call it 2 years, where the royalty companies will lead that charge in this case after the gold price and silver price started to move. And then the larger names like your Newmonts and your Agnicos started to move. And then your mid-tier names like your First Majestics and Core Mining started to move. And now you've got these juniors, and it's really not as simple as just throwing money at the junior sector. You've got to do your homework and figure out which names are going to do better than others. So I see a lot of opportunity in some names that are under pressure due to things like tax loss selling in November, December, just coming out of that, or they are under pressure due to a corporate event like a merger or an acquisition or something. So Fury Gold comes to mind. They've been under pressure because they bought East Main, and I think at $1.40 US right now, when this breaks through $1.55, this is going to go up, as John says, like a rocket ship, or break that resistance level pretty quickly, because there's a lot of shortage risk out there, right? So we see a lot of opportunity in the mining stocks because you can get leverage to that gold price or that silver price. And to talk to you about nickel and palladium and the like, I just think there's a tremendous opportunity out there. A lot of my peers don't talk about the industrial metals and the opportunity in the stocks. But nickel's at an all-time, well, not an all-time high, but it's trading right now at the year-to-date or 1 year high as we speak, right? It's breaking out from that September 2nd high currently right now Copper's been in an uptrend for weeks. If you look at, the copper senior names, they've participated, but names, I would argue, like Granite Copper have not participated as much as they can. And so that's why we're positioned in something like Granite as opposed to a name like FCX, which we see value in, but we don't see as much value, right? So we like nickel, we like copper, we like palladium, we like it all.
And Elon Musk is begging people to bring him more nickel, correct? That's what I'm hearing.
Yes. But the question then becomes, like, how do you play that? Because if you look at what happened with Giga Metals, there was a rumor out there that they were going to, have a deal with Tesla. The stock exploded up 270%, I think, in one day, and then it faded because that didn't happen, right? So you have to be very careful in the junior space. And that's why I like Group 10, because people don't give it credit for its nickel exposure at all. It's known as more of a palladium play adjacent to, Sibanye, and I'm sure Mike will talk more about that.
Before I let you go, we've seen announcements from major banks like Goldman Sachs about the beginning of a commodities super cycle. So right now, today, how do investors take advantage of that?
So you have to get your hands dirty and do the homework. I mean, we provide portfolio reviews, Cindy, for clients, because I'm a licensed advisor, unlike so many newsletter writers that are not. We want to spend time on the phone getting to know, someone who has $1 million to deploy, right? How much of that should be in mining stocks given your risk tolerance, and what do you own? I mean, if you bought stuff this past summer on the rally into August, are you comfortable holding those names now that they're down 40 or 50%? Do you even know what they do? So, one of the things that I've talked to these CEOs about is that I really appreciate their willingness to communicate. I would say that that's critical for an investor to be able to understand what you own and, have that communication line open with an IR team, investor relations, or, directly a CEO like we have on the panel today. But I look for, catalysts over the next 3 to 12 months. I'm not a patient investor. So if something isn't happening in the next 12 months, I'm looking at something else. But I also look at no debt loads, or low debt loads, manageable debt, because that, as John knows, in the past, 5 to 7 years has really gotten a lot of companies derailed. There's looking at no debt, having enough cash to fund the operations, senior management that knows what they're doing. These are all things that are important.
Well, thank you for your insight, John. We really appreciate that. As we mentioned off the top, we've got the leaders from the Metallic Group of companies here, and they put together an exciting portfolio of projects. Greg Johnson, chairman of the Metallic Group, could you give us some background on the Metallic Group and how you've managed to assemble such an impressive portfolio of projects within these companies in just a short amount of years? Oh, you're muted. There we go. Perfect.
Thanks for having us on. It's a pleasure to be part of the Streetwise live event. It has been a super exciting couple of years for the Metallic Group. Looking at John Newell's charts, we started the process of putting together the group in 2016, which was right in the heart of the bear market. We were looking for opportunities to bring together a highly experienced, highly successful exploration team. And we felt we were nearing a turning point in the metal price cycle that made it the right time to be looking at acquisitions, and in preparation for what we saw as the next major bull market. Our approach has been to apply some of the key elements that were so successful with NovaGold, where several of us were part of taking that company from a small cap exploration story to a multi-billion-dollar market value in the last metal price cycle. By bringing together that approach over the past 4 years in this, just leaving this bear market part, we've been able to put together 4 what we believe have the potential to be world-class assets in the 3 companies, with a focus on where we saw an opportunity for discovery of basically the size deposit that a major would be interested in. So focusing on those assets that have real scale and potential and grade. Starting with our silver-focused company, we managed to consolidate next to Alexco Resources, one of the world's highest silver, highest grade silver districts in the Keno Hill Silver District. With Group 10 Metals, this is our battery metal and platinum group element company. We've consolidated the lower Stillwater complex next to Sibanye Stillwater. Again, this is one of the world's highest grade producing platinum group metal districts. And then our most recent company, Granite Creek Copper, we've taken the same approach in copper, consolidating the southern half of the Carmax Minto copper belt, which at one point was one of the highest grade operating copper mines in the world. So it's been an exciting period. This focus on district scale assets in mature brownfield districts that have existing infrastructure is critical for putting together the story in each of the companies. And you'll see that common strategy and approach here in the Metallic Group.
Okay, well, let's find out more about these companies. Tim Johnson, president of Granite Creek Copper. You're the newest and youngest company in the group. It's been a busy 2 years for you. Walk us through the company and your progress to date.
Yeah, thank you, Cindy. You're right. We are fairly new. We were launched in January 2019. And we were able in a very short time period to, since making our acquisition of our key asset in the Yukon, was the Stu project. We quickly recognized the synergies with our neighbors to the south of us, Copper North. In our first year, we made a 30% acquisition in that company and then closed that acquisition in November of last year, giving us a resource stage project. And again, jumped sort of ahead in having resources and having the ability to expand on those and grow them.
So why should investors be looking at Granite Creek for exposure to copper? I think you probably just answered that question.
Well, there's a few other elements to it. I mean, grade is king. Our project and our Carmax project in the Yukon is in the Minto Copper District, which is home to some of the highest grade in Western Canada. So we've got an advanced stage project. We have the ability to expand on that, and that's what we're going to do.
And you mentioned your acquisition of Copper North. Tell us about that, and have your shareholders benefited from that?
Well, early on, we recognized the synergies of the two projects, our Stu project to the north and the Carmax project to the south. Carmax deposit itself had some decent grade, almost 24 million tons of 0.85% copper, and good gold and precious, our good gold and silver credits, which gives us a copper equivalent of about 1.4%. So that's quite a high grade. We think the economics are going to be very strong. We have just over 440 million pounds contained copper on that asset, and again, we've got the adjacent ground, the highly prospective adjacent ground, to be able to grow that.
And your presentation materials state that your goal is to identify 1 billion pounds of contained copper. Can you comment on how you plan to achieve that goal and what happens after that?
Well, we started with a running start with already 440 million pounds contained copper. Now, the reason we use 1 billion pounds is that we know from talking to other people that is kind of the entry point for some of the majors. So they look for at least 1 billion pounds plus blue sky. So once we get to that metric, we believe we can attract some major players to the belt, major copper producers to be able to advance the project further. We've already got multiple zones that we've worked up based on historic work and some work that we've done over the past 2 years on the ground. So we've got really compelling drill targets to be able to move forward on resource expansion this field season.
And really quickly, what's your long-term goal for Granite Creek?
Well, being a collaborative worker within the Minto belt, our long-term goal is to attract a major player to the belt as either a takeout scenario or a partnership to develop. We don't see ourselves as mine builders. We see ourselves as quickly growing value for shareholders by delineating resources and then partnering with the people who really know how to build mines.
Okay. Well, thank you very much, Tim. All right, let's bring in Michael Rowley here, president of Group 10 Metals. You had a big year with your flagship Stillwater West project in Montana. The move to electric vehicles is no doubt good for your business. So tell us why that's a positive and the outlook for the year ahead for you guys.
Sure, thank you. I'd be glad to. We had a fabulous year at Stillwater West, and the demand for electric vehicles has definitely been supportive in that regard, as has the demand for the outlook for platinum group metals and even gold. Stillwater West is a really exciting exploration asset, and it ticks all the boxes on that metallic group checklist. In the depths of the bear market in 2017, we had the opportunity to acquire half of the Stillwater district in southern Montana. Stillwater is the highest grade palladium platinum district in the world, and it's the largest outside of South Africa and Russia. From there, we've applied geologic models from some of the largest and most profitable nickel copper PGE mines in the world. These are from the Platreef district of South Africa. And we're doing that based on known similarities between these districts. We've made rapid progress, and we've now proven that Platreef in Montana model. And we're well on our way to our first maiden resources on the project. And that's a key milestone, of course. As you can see from the slide that's up right now, infrastructure is excellent as we share the district with Sibanye Stillwater. John Feneck mentioned them a minute ago. These guys are a $12 billion global mining giant. They operate 3 mines right beside us and a smelter refinery complex in the district nearby. And the broader district actually has a history of copper, nickel, and even chrome mining dating back to the 1800s. Quick look at our market. We have a market cap of about a little under 60 million Canadian, and we have 2.5 million in the bank. So we're funded to deliver on all our current objectives, the most critical ones being delivery of drill results in the coming weeks, and we expect that to be a positive catalyst. And then maiden resources, we think in the first half of this year, and that's a key milestone for any junior. Outside of that, we have about 13 million of in-the-money warrants and options. And we have some other funding options that we're looking at as well, including monetizing some non-core assets.
Okay, you're at discovery stage and moving to resource stage near term. So why should that add value to investors?
Well, that's a critical point of revaluation for any junior. It's a major point of adding value. And we have now, at our 3 most advanced target areas, we have sufficient drilling to produce our first resources on the project. And that's absolutely one of our top priorities this year. That's important because that is one of the most value-creating points for the development of a mining company. It's a big system, and we think we have targets with potential for multi-million-ounce platinum group metal deposits, along with nickel, copper, and cobalt as well. And if we look outside of that, our target models in the Platreef, South Africa, are tens of millions of ounces and billions of pounds nickel and copper. So there's big potential here.
So what do you see on the horizon for Group 10?
Debuting those resources is a key catalyst going forward. We've seen some other companies in the nickel and PGE space debut resources and appreciate very nicely in the market on that basis. We're just now entering that point, and we would expect a similar revaluation on that basis. Beyond that, we're in one of the absolute best districts in the world for these commodities, and it happens to be in the US, in a productive district with 3 mines and a smelter at the time when the US is listed 5 of these commodities as being critical, and they're looking to secure domestic supplies. So we're very well positioned in terms of district potential and even politics market. There's a lot of upside to this.
Future's looking good. Okay, Greg Johnson, CEO of Metallic Minerals. Been a big year for silver, and you just completed your biggest exploration program in the company's history at your Keno Silver project in the Yukon. Tell us a little bit about that.
It has been an exciting year for Metallic Minerals. We've made great progress at both our Keno Hill and La Plata projects. In Keno Hill, we're alongside of Alexco, who's recently turned back on mining and processing. So that's a great development for the district, as well as at our new La Plata silver gold project that we acquired last fall down in the southwestern US that was formerly held by Rio Tinto and Freeport. And we see the potential for major development of a very large system there. Keno Hill is one of the world's highest grade producing silver districts. It's had over 300 million ounces of past production and current resources. And recent discoveries like the Birmingham or Alexco have demonstrated that this historic district has lots of potential for new world-class discoveries. Our focus is on the less explored parts of the Keno Hill district. Our exploration program last year was focused. It was a two-pronged program, part core drilling on the advanced stage targets that have the potential to move towards initial maiden resources for the company. And then the second very exciting component being the development of these multi-kilometer scale targets where we're applying, similar to Group 10 metals, new geologic models to this historic district. In particular, we've identified 12 multi-kilometer scale targets in soils and geophysics that appear to have the characteristics of some of the largest silver deposits in the world, such as Newmont's giant Penasquito and Cripple Creek deposits. And we're seeing some similar geologic indicators. And so the first drilling in those targets late last year is pending, and we're quite excited about that as a major development for the company.
Yeah, let's talk a little bit about how moving to resource stage from the discovery stage is going to be impacting your investors. And I think you've got a slide to show us to tell us more about that.
Yeah, so as Mike mentioned earlier, I mean, if we look at the life cycle of a mining company, oftentimes we see more value created in that early discovery to resource stage than we see at any other point really in the development of a company until perhaps when it goes into production. And so all three companies are really at the cusp of that. Here in the Metallic Minerals holdings in the Keno Silver District, we've got the district scale map on the screen. And what you can see is on the left-hand side of the slide, the western part of the district, the orange and yellow circles represent the historic production, the large historic mines. The yellow represent the new resources that have been discovered just here in the last couple of years. And off on the east, we have the same geologic setting. And those red outlines represent these multi-kilometer scale targets, but we have the same geologic environment as on the western part of the district, but much less explored. And so by applying this discovery-focused approach in those areas, getting the first drill holes into those targets and intercepting sulfides and structure and Keno-style mineralization, our shareholders are pretty excited about what's unfolding out there and the potential for not only defining new resources along the known trends, but potentially defining brand new trends out here on the eastern part of the district. This work has pushed what's called the Keno District out at least 10 kilometers to the east onto Metallic Minerals 100% owned land, really opening up a huge area for potential discovery.
A lot of exciting stuff there, Greg. Okay, let's bring John Newell back in one more time to provide some technical analysis on the metals and companies that we've been talking about here today so we can kind of break them down individually. John, you ready for this?
Yep.
Okay, take us through it.
Okay, the first chart is the copper chart, and you can see that the downtrend that's lasted basically 8 years has been broken to the upside. I wish I could show shorter term charts. I had to pick one that best represents the short, medium, and longer term price targets. But one target has been hit. One has, just almost been hit, that 380 mark. And then the old high resistance at 315 might represent some resistance. And I've got a bigger picture target of $6.25. But you can see what happens in the same way that we go. If we went back to the inflation chart, you can see 2004, you had that big run up in copper. And I think it looks very symmetrical for a potential move like that. We could see very dramatic price movement. And just to go to Granite Creek, the chart, it doesn't have a lot of history, and I use back prices and history to help find targets. But that said, you can see that it built a base, broke out, pulled back, stair-stepping higher, built what is a kind of like a head and shoulders consolidation, or broke out and has pulled back to try to test that former resistance that would now be support, at the 18, 19, 20 cent area. And I have a target of the 36 to 40 cent area on a measured move. To me, Granite Creek looks excellent as a junior copper play. The next chart is platinum. I wish I could show you my palladium charts from a few years ago. They were pretty accurate, and I hope that this happens in platinum. But my first target is 1200. 1470 would be the second target. Old high resistance at 1900, and I just don't think it's appropriate to talk about a big picture target here, but you can see that a downtrend has been broken. There is I do have a platinum palladium chart, and platinum looks like palladium did a few years ago. And just on the chart of a group 10 metals, you can see the long base that's been broken. It came off the COVID lows, built a flag pattern. The first target was met at 42 cents. The second target is 70 cents, and the third is 95 cents. So I think having gone to met the first target, my work suggests that it could it's it's got the right to advance to a second target over time. And the next chart, they're hard to pick because I have a lot of charts on silver, but this one, you're breaking fan lines. You're trying to break the third fan line. That would be very, very bullish. On my other shorter term charts, we've met two targets of around 22 and 25 and change. The next third target in that series of targets is $35. Old high resistance at around 50, and a bigger picture target, which we can show you, but maybe not mention. But I think silver looks exceptional, especially on a break above that third band line. The next chart is a chart. I have the most experience with metallic minerals because I followed it for a long time. And I saw this chart pattern. It formed three targets and then hit them very, very quickly. I didn't know that they would happen that fast, but all the targets were met, and in fact, in this case, the third target was exceeded. On the next chart, having completed a first series of targets, having all been met and exceeded, then you can go to a bigger picture target in the work that we do. And now you're getting support at the Fibonacci 618. And so far it's held. I think that after that long period of downtrend, the big spike up, it's doing the work. No parabolic rise historically holds forever. And so this natural correction back to the 618 bodes very well. And in the work that I do, it's completing the rules of my technical analysis to proceed to having built three new targets in a second series of targets. And if anyone's familiar with my work, you can see it on Great Bear or K92. You have a first series, and then if the rules apply, you get a second series. And that's what looks like is happening with metallic minerals. And that is pretty much the chart story.
So if I get the gist, what you're saying is things look good for all these companies. Your targets are good, and you seem to see things trending in the right direction. Am I right, John?
Absolutely. And in fact, I would argue that the best value in the space is in the junior sector right now. I think they offer for, the appropriate investor, and with the caveat that they're risky investments by their very nature, that they are cheap historically, and they offer the most upside of the sector if in fact they find joy in the drill bit or expand the resource, or part of a merger, or some of the parts makes a greater whole. I'm extremely bullish on the junior exploration space, especially ones in good jurisdictions, like Canada as an example, like the United States, and there's rules and laws. So yeah.
All right. Well, we're happy to hear that, and I'm really happy that all of you from the Metallic group of companies were able to join us today, as well as John Feneck and John Newell. And we did have a couple of questions that came in from people who registered. And even though I've gone a little long here, John Feneck, I'm going to give you the last word here, because Waylon asks about battery grade nickel deposits. What are your thoughts?
Sure. So I would say go to Group 10's website and look at their news flow from the second half of last year. I mean, as I mentioned at the onset, this is a play that is known for its palladium potentially, but nickel is there as well. And in my view, it's cheap versus peers right now. It doesn't have a P to NAV because it doesn't have a resource yet, but that's the opportunity. You want to buy these stocks before the analysts start writing them up, right? So Group 10 is one of my top choices. The other one would be FPX Nickel, which is FPOCF or FPX on the TSX, because their P to NAV right now is 0.05 versus the peer group around 0.20. And you've got names like Talon, TLOFF, trading at 0.80. I mean, I would short Talon here if I could. I can't, but I would be buying hand over fist names like Group 10 or FPX.
Okay, good stuff. Gentlemen, thank you all so much for joining us today. For up-to-date information about established and emerging companies and their stocks, please subscribe to Street Smart Live. I think if you hit right down here, that's the subscription area. And don't forget to hit the thumbs up at the bottom of your screen. That's down there. Until next time, be well and take care. Have a good one. Thanks, everybody.
Thank you.
Thank you.
Thanks.